Hello and welcome to Bloomberg Quint Live, and these are the headlines at 12. The markets are trading near the day's high and both benchmarks continue to trade with healthy gains. But the small caps slip into the red, mid caps though hold up. India VIX declines. Troubles mount for Nirav Modi and Punjab National Bank a day after the lender disclosed a $1.8 billion fraud. Other banks seek repayment of dues. The Enforcement Directorate registers a case against Nirav Modi. And in that regard, Enforcement Directorate conducts searches at Nirav Modi's 12 premises, and searches are also conducted on the premises of Mehul Choksi and PNB officials named in the FIR. Jewelry stocks trade lower after various investigative agencies begin their probe into the purported fraud. And MT Educare gives up some of its opening gains but is trading with gains of more than 2% after Zlearn says it will acquire more than 44% stake in the company. And starting now is Hot Money with Darshan Mehta. Over to you, Darshan.
Thanks, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Senthil Manikandan of Newberry Capital and independent market expert Dharmesh Kant join us on the show. Thank you to both the guests for joining me on the show. Today on Hot Money, we'll discuss stocks like Sun Pharma, Nestle, NCC and the PSU banking space. Let's start with the first one, and that is Sun Pharma. Came out with a set of numbers which were disappointing. Their subsidiary Taro also had disappointed with numbers, and the management commentary not the most encouraging in terms of missing the revenue guidance. They have said that the margins will remain range bound in the range of 20 to 22% in the second half, but the commentary not the best. What should one do with Sun Pharma given the fact that even their prime plant Halol is undergoing inspection? What our guests make of it? So Dharmesh, Sun Pharma, what did you make of the numbers?
See, numbers were disappointing on the lines, and this has been the scene with most of the pharma companies. The numbers are not up to the mark, be Sun Pharma, Glenmark, the others who have reported. And I think the headwinds which were there, this again advocates that it's still there. Nothing is, going out of the system. So be it, channel cartelization out there in the US or pricing pressure and new approvals not coming, exclusivities which were there is getting out of the way. So those premium, valuations which they got earlier because of the exclusivity of the drugs which was there. Taro is the case in point where the sales are becoming more generic and more participation and competition is coming. So these all will continue to be where it is. The valuation multiples which we used to give them will be re-rated on a downside.
Okay.
What depends on the Sun Pharma is the Halol thing. So all the facilities, the pharma companies in general in India, the facilities which are now subject to US FDA inspection and where they have not been able to export the drugs to the US, if those gets cleared, you will have a valuation re-rating. Okay. That is anyone's guess. So I don't think one should be buying on account of that. And this will be the case. For my advice is stay away from the pharma as a space. Okay.
But if let's say Halol gets approved, then does it make a case to enter Sun Pharma?
Maybe 25-30% kind of a valuation uptake. But again, if the approval is fine, but you need to roll out the drugs, you need to have fresh approvals in place for the drugs, and that will take 6 months to 1 year time frame. Okay. But by that time the scenario will again change, the competition will again change. But as a trade, yes, you will definitely get a trade on. Whether Sun Pharma is able to capitalize, given the expertise, I believe that they should be able to do that. So 20-30% kind of a stock price re-rating can happen, not beyond that.
Okay, and Sun Pharma, no doubt all the analyst reports that I was reading, most of them do indicate that despite results not coming, it still continues to trade at almost close to 25 to 30 times multiple compared to others like Lupin or something which are trading at half Sun Pharma valuation. Do you think that the valuations are much ahead for Sun Pharma at this point of time?
See, the present valuation which you are getting is just because of the Halol inspection which is in line. And Sun Pharma, if you look at Sun Pharma, the stock has corrected much ahead of the other peers. So Lupin and all started correcting much later, but the correction has been far severe than Sun Pharma. And Sun Pharma was always, darling stock of the pharmaceutical space. So still, because the facilities which are, subject to inspection, if they gets cleared, so revenue can easily double. The potential is that much. Whereas in the case of other pharmaceutical companies, that potential is missing. So just on the capacity basis, I mean replacement cost basis, that commands this premium. Otherwise, I don't think. From the business perspective, this does appear to be expensive valuation.
Okay, so that's the view. Stay away from Sun Pharma at this point of time. Senthil, do you agree on Sun Pharma?
So we remain neutral on the stock. So if you look at the Indian generic space, the kind of A&D approvals which Indian players were getting in the last 2-3 years have been going on the faster pace. Like the Indian companies got around 60 approvals in FY15. And in FY17 they got around 145 approvals. And if you look at the 9 months for the FY18, they've already exceeded the last year's benchmark out of 145 approvals. So this faster approvals is further bringing pain to the companies of faster price erosion. And the companies have already mentioned like 10 to 12% would be the price erosion going forward. And this is the pain point with respect to the generic pharma companies. And with respect to Sun Pharma, why it's trading at a premium valuation to other peers is majorly because of the pipeline. Like their either it be the specialty pipeline or whatever the market is expecting is next 2 to 3 years the specialty pipeline could bring in more number of sales and the margins could improve. And even after the results were disappointing, the stock didn't correct majorly because I think it has already factored in. If you look at the entire pharma pack is trading at a below 1 standard deviation of mean. So because of this, with the deterioration in the business, already the price erosion also happened. So we are neutral on the stock and also neutral on the entire pharma space.
Anything that you like in the pharma space, specialty wise, like say hospitals or domestic pharma, is there something that you like in the pharma space?
So currently domestic based domestic focused pharma companies are doing well because after the GST there was some trouble, but coming after GST this quarter we have seen all the domestic focused pharma companies are doing double-digit growth.
Okay.
So investors who are risk averse can buy domestic focused pharma companies instead of the US focused players.
Okay, so that's the view that's coming in on Sun Pharma. It's pretty much a neutral view that's coming in on Sun Pharma. I think hull inspection is something that needs to be seen at before any kind of move can be made on Sun Pharma. Now, the next stock that we want to talk about is Nestle. Stock trading at days high and probably must have cooled off, but yes, it's trading up almost 5% after strong earnings that the company posted. Sales were up 15%, margins at 20%, profit up 60%. So what's the view on Nestle going ahead? We'll ask our guest. Senthil, you go first. What did you make of Nestle's results and what should one do on Nestle?
So numbers were clear beat, basically because of the margin improvement. This is because I think partially because of the change in product mix and partially because of the raw material prices fall. If you see the raw materials right from sugar, cocoa or coffee, all have fallen year over year basis. So because of that there has been a 2.5% margin improvement. And basically we remain neutral on the stock because of the valuations. Because it is trading at around 50 times 1 year forward earnings is not very cheap. But at the same time, if you look at as a portfolio, you can have a stock like Nestle or HUL, which are considered as a defensive picks. And with markets trading at highs, having stocks like HUL or Nestle as a portfolio, I think it's a good bet.
Okay. What about you? What did you make of Nestle's numbers and what did you like about it or did you not like about it?
So as he correctly pointed out, the numbers were good and primarily because of the input costs coming down. So there was a margin improvement. At the same time, they were able to gain market traction. A 15% kind of a revenue growth being a FMCG company is a big task to achieve in a country like India. They have been able to overcome the Maggi debacle which was there. And the product portfolio has been fine. Nestle has, in more than other ways, have been a pioneer into Indian company as far as dairy products are concerned, be it Milkmaid or Kit Kat. So all their products are doing well. What they need to do now is come out with something again new to gain a further market traction. As a portfolio buy, it always merits attention in your portfolio because with ROE and ROCs in excess of 30%, and if you are able to clock double-digit growth on the top line, dividend yield is good. These will continue to command 50-60 kind of a PE multiple. So because of just the asset turnover ratio and other financials working in their favor. So for me, it remains a portfolio buy. You can expect a modest return of 15-17% on an annualized basis on a stock price. So based on FY20 earnings multiple, which I expect 170-180 kind of an EPS for FY20, even if you give it a 50 kind of a multiple, so 11,000 kind of a stock price is likely to be there.
Okay, so that means another 3,500 rupee upside is something that you're seeing on the same. And you're okay about the valuations being on the higher side?
Yeah, But that's the case with all FMCG companies operating in India. It will continue to be so.
Okay, so that's the view that's coming in on Nestle. Senthil does speak about that, it's a good company, but valuations at this point of time seems to be the concern. But Dharmesh is extremely bullish on the counter. He sees a potential target of 11,000 on Nestle going ahead. The next stock that we want to talk about is NCC. Came out with numbers yesterday. Pretty strong set of numbers. Was up 10% yesterday. Continues its good run. It's up another 1% in trade today. Revenues were flat, but profit growth of almost 70%. EBITDA margins coming in at almost 14% versus 9%. And the management commentary was pretty strong. What should one do with NCC? Is there revival in private capex? Dharmesh, you go first. NCC, what did you make of the numbers, and is there traction in some of the infrastructure companies now?
See, infrastructure will see the traction going forward because all the push measures which the government is taking. As far as NCC's numbers are concerned, the numbers were primarily good because of accounting treatment of the inventories work in progress. If you look at the numbers in detail, it was that reversal. So that added to the bottom line. Top line, as you said, was flat, almost flat kind of a top line. But if you look at the mid-tier infrastructure company, NCC stands out among the rest of the pack.
Okay.
They have been able to reduce their debt significantly from 3,400 crores to 2,400 crores, 1,000 crore kind of a debt reduction they have done. They have been raised their capital to meet working capital requirement. And now the government which they are allotting the projects now is more of a EPC kind of a project, which benefits the all the infrastructure companies, because earlier what was happening, the awards were allotted, but the clearance for land and forest and these used to take time, and that used to hit your entire financial. So that is now out of the way. Once 80% of the land clearance is there, then only road construction projects are being awarded. So that is going in favor of NCC, and the order book is stupendous. 31,000 crores of order book takes care of 2.5 years of revenue visibility with 25% of CAGR. Execution ability is always there with NCC. So I do think the stock is now fairly priced, but if you have a perspective of 2 years kind of a horizon, one should be buyer into a stock. I see 30-35% kind of a stock price traction.
Okay, so there is strong traction that's coming in on NCC, and I believe you're also quite bullish on NCC.
Yes, sir. Basically because of the growth in the order book. If you see their order book, as Dharmesh mentioned, it's around above 30,000 crores and it's up 54% year over year. And the management, at the starting of the year, they commented like they will be getting order inflow of 10,000 crores. But if you see 9 months, their order inflow has already exceeded their expectation.
Okay.
So currently the order inflow for this year was around 12,500 crores. So clearly this gives a huge amount of revenue usually for the next 2 years. So we remain bullish on the stock, and we expect on back of this steady order inflow, company can post a 25% kind of growth next 2 to 3 years. So based on that, they are around 10-15% coming from their valuation coming on both projects also. But majority of the projects being in the EPC side, it is also favorable to the company. So on based off FY90 valuation, we expect we value the stock around 150 odd levels.
150 odd levels. So there is substantial potential upside that is there on NCC. So another 20 rupees upside is something Senthil sees. So both our guests are quite bullish on NCC at this point of time, given the fact that the order numbers were good and the order book play is still there. Dharmesh believes is the best play in the mid-cap infra basket at this point of time. And finally, let's talk about a sector which has been in focus over the past few days, not for the right reasons. It's the public sector bank. Today it's managing to trade flat, but yesterday the index was down almost 5%, post the news of Punjab National Bank indicating a potential fraud of 11,000 crores on its branch. So that seems to be the big concern. But if you look at what's happening, most of the PSU banks are again at the same levels as the bank recapitalization news came in. So the opening level that happened, most of the banks have corrected back to that level. Is it a good time to buy PSU banks, or should one stick to the private sector banks? We'll ask our guest. Senthil, among the PSU, which is the best long or short? What's your view on the PSU banking space?
So we remain neutral to bearish on the entire PSU bank sector itself, because previously, like 2 to 3 quarters back, we have remained favorable on the large cap PSU banks like SBI or PNB. But with the results coming in from SBI this quarter, there is a large amount of divergence they have shown on the books. And recently, yesterday the news on PNB showing the risk management practices of the banks are yet to improve. So the recapitalization was big boost for this sector. But entire recapitalization it seems it is going to go into the provision for the already provisioned bad loans. So with no capital coming in for the growth, I think PSU banks will follow the last decade performance of losing their market share to the private sector players.
Okay.
So I think among the corporate lenders, it is much preferable to go in for a private sector focused corporate lenders instead of going for a...
Which is the best private sector bank that you feel at this point of time?
So in the private sector banks focused on the corporate lending side, it is better to go for a ICICI or a Axis Bank. So there, I think there is some amount of management accountability is there. So here, if you see the PSU banks, actually there is a management rotation happens every 2 to 3 years. Because of this, there is not much long-term focus is there. And because of this clear reason, because banking being a commodity play, actually the management is a clear moat that the long term the wealth creation happens. So if you take HDFC banks or RBL or S Bank, the management has been there with the bank for the last 10-15 years and they have steadily built the bank. Because of that, there has been a wealth creation happened. But if you look at the PSU banks, with the management rotation happening every 2 to 3 years, this is not happening.
Okay.
So we remain neutral to bearish on the PSU banks.
And which is the, if there's a choice, like which is the worst PSU bank that you know, is there a comment that you would want to give? Which were the clear PSU banks you would clearly avoid?
So apart from these large players like SBI or PNB, those small players like Dina Bank or Indian Overseas Banks are clearly avoidable stocks.
Okay, so that's the view that's coming in. Dharmesh, your top pick would be an Indian bank in the PSU's bank. So what's the reason?
See, if you look at the PSU banks, you expect something going wrong and it goes wrong. For the last 3-4 years, this has been happening, and every time whenever you try to be optimist, something or the other crops up and again it drags down the entire basket. So the scene is like that, as Senthil was pointing out, the ownership has been the main issue because there is no owners getting changed. So everybody feels, they can, just shake off the responsibility and carry on. In that environment, if you look at what has been the major concern is the asset quality. And asset quality, if you look at Indian banks, this is the only PSU banks which is having asset quality much improved compared to its peers. 6% kind of a gross NPA, 3% kind of a net NPA. Even this quarter earnings on the gross level, I mean absolute numbers also, the NPAs did not increase in spite of severe provisioning they have done.
Okay.
So profits were in line. Other than the RBI mandated provisioning which they have to do, that was the reason why 50% drop in profitability was there. Business is as usual. So my own take is our PSU banks which has survived this entire economic turmoil for the last 6-7 years. And even in the last list which RBI came out, they did not have any worry as far as red flags were not there, even yellow flags were not there as far as Indian bank is concerned. So if one has to place a bet, so this seems to be,
And which is the worst place in the PSU banking space?
There are many. IDBI should stand out. IDBI, Central Bank, Bank of India, you just name it. And you just don't know which kind of animal will crop out.
Okay.
So better stay away.
So PSU banking space is a clear avoid, except for Indian Bank, which Dharmesh believes is a potential to buy. Senthil, Dharmesh, thanks so much for joining me on Hot Money. But we have to take this quick update on the 11,000 crore Punjab National Bank fraud. The Enforcement Directorate is conducting search and seizure operations across 12 locations in Mumbai. This includes Nirav Modi's residence and offices and the residences of others named in the CBI FIR. Ronak Kukade from Quint Hindi joins us with the details. Ronak, what more do you know about the searches?
जी देखिए, अभी फिलहाल जो जानकारी ईडी की ओर से दी जा रही है उसके मुताबिक इससे पहले नीरव मोदी के खिलाफ जो 280 करोड़ का फ्रॉड का मामला दर्ज किया था, उस सिलसिले में ये सर्च ऑपरेशन जो है वो ईडी की ओर से चलाया गया है। मुख्य तौर पर अगर देखें तो इस पूरे मामले में ईडी देखना चाहती है कि मनी जो ट्रांसफर हुए हैं फॉरेन में, क्या उस मामले मनी लॉन्ड्रिंग के मामले में पूरे सर्च जो है वो किए जा रहे हैं। करीबन 12 ठिकानों पर ये सर्च ऑपरेशन किए जा रहे हैं। मुख्य तौर पर जो अभी ईडी की ओर से जानकारी दी जा रही है कि जो पंजाब नेशनल बैंक में जो 11,000 करोड़ का फ्रॉड वाला मामला दर्ज सीबीआई ने किया है, उस मामले में फिलहाल जानकारी जो है वो ईडी की ओर से नहीं दी जा रही। क्या उस मामले में सर्च ऑपरेशन चल रहे हैं तो उसमें कोई क्लैरिटी नहीं दी गई है। लेकिन इसके पहले जो 280 करोड़ रुपए का मामला दर्ज किया गया था, वो अब ईडी ने अपने हाथों में लिया और उस पूरे मामले में तफ्तीश जो है वो की जा रही है। करीबन मुंबई के 12 ठिकानों पर ये सर्च ऑपरेशन जो है वो शुरू किए गए हैं। जी।
Okay, many thanks for that, Ronak. We'll be certainly watching out for more details from you on this entire story. But it's been an operationally strong December quarter for Sandur Manganese, with the profits seeing a jump of around 124%. Margins too expanded almost 22% this time. What are the key contributors to the numbers? Let's ask the management. Joining us on the phone line is Chief Financial Officer K. Raman. We also have Nikki Mirchandani from a research team joining us on the show. Nikki, take it away.
Thank you, Darshan, for that. It's been a good quarter for the company, as you just mentioned. We've seen a good 50% growth year on year in terms of the top line for this company. Mr. Raman, I'd like to understand what kind of growth can we expect going forward in the quarter and also for financial year 19?
See, financial year 18, I can tell you, because the prices are not stabilized. This particular quarter, there was an increase in the prices. There was a uptrend in iron ore prices. Okay, we are not sure whether the same thing will continue for the next year. Next quarter it will continue, because already we have February figures. Sales are going on. So next year I cannot tell you. The prices are likely to remain same.
Okay, if not for prices, I'd like to understand a little bit about the EBITDA. Operational performance of the company has been fairly decent on year basis. We've seen a good 80% jump and the margins have expanded to 21%. Can we expect a further expansion going forward for the March quarter?
Yes. 22% I can definitely be delivering. We are only looking at a higher figure. See, compared to last year, we had an increase of 1.2% this time, EBITDA. That may not be there, but it will remain same. We'll get, if you take EBITDA without the depreciation thing, we will get about 24 to 25%.
Sure. In terms of segmental breaker, I'd like to understand the outlook for both your mining as well as ferroalloy and power business. What kind of growth are you expecting going forward in the next quarter and for the fiscal in these two segments?
See, as you know, mining, there is a restriction on the production. Our limit is 1.6 million tons. Okay. Last year it was 1.1 million tons. This year it is 1.6. But the increase came in December, so we can complete our quota. So we'll be completing next year 1.6. So the outlook is better for next year in respect of iron ore. In respect of ferroalloy, the sales will be almost maybe another 10% increase may be there in the production. That's all.
Mr. Raman, although it has been a good quarter year-on-year basis, but then sequentially some weakness has crept in. We've seen the margins contracting. I'd like to understand the reasons for same.
What happened was we had to provide for some extra item for service tax on royalties, a new item that has come. There is a new levy that has come. So we had to provide for about 8 to 9 crores this quarter. That actually belongs to the entire 9 months, but we put it in this quarter. That is the reason for the drop. Yeah, otherwise there should not have been a drop. Yeah.
All right, the last question that I have for you before we let you go is we'd like to understand a bit about outlook on iron ore prices. Given that 7 mines in Odisha have been shut due to no payment of penalty, and also we've seen some ban in Goa coming in. What kind of impact would this have in terms of the prices for your company?
The Odisha thing should not affect us, because this normally iron ore gets localized. The supply is local. We supply 70 to 80% to Jindal, JSW, Swarnagallu. So Odisha thing should not affect us. Even Goa thing also should not affect us, because Goa is a low grade. So that is exported, not actually locally consumed. Our grade is very low. It is meant only for export mostly. That's why from the beginning Goa has been an export-oriented unit. Entire mining is only on exports. So that won't affect our sales. Yeah.
All right, Mr. Raman, thank you so much for your time. It was a pleasure talking to you. Back to you, Darshan.
Okay, so that was the management of Sandur Manganese indicating that there probably will not be a price increase, but margins will be stable going ahead. With that, it's a wrap on today's Hot Money. Ask PQ comes up next. Stay tuned to Bloomberg.